The economy is boiling under the surface. We have made video after video after video over the last year or two about the economy and how the massive job losses, the rising rates, are going to eventually cripple the economy. We have made numerous videos on the subject. We've made numerous videos about how to prepare for it, what's to come. Go back in the backlog there, the link in the description for our blog outlining this, all the videos we have done outlining this very topic. I'm going to give you an update on our portfolio right now, how it's structured, and what it looks like as of September, the allocation. So if you want to see the actual article, the actual allocations, the pie charts and everything of how we're set up and how we've done very well over the last decade or so, go to the link in the description, again the blog, the Substack there, you can go check it out for free, go check it out and see exactly what we're doing. So I'm going to go through this here. The prevailing narrative suggests that the economy remains robust, despite the significant job losses we've witnessed and increased steady inflation. Again, we have chronicled this over and over again, massive job losses, yet the government CPI remains okay. The government unemployment numbers remain okay. Come on. Let's be real here. We need to use our intellect, our intuition, our gut to understand what's truly going on. The narrative is fed to you by none other than the federal government and the Treasury Secretary Janet Yellen, who used to be the Federal Reserve Chair, mind you. However, interest rates are surging, reaching a 15-year high in 10-year Treasury rates, with no clear indication of slowing rate hikes. Although they did just stay the same and pause it for now, but we'll see. Prepare for potential turbulence ahead. More business closures, increased unrest, growing chaos, and growing tent cities. Again, all things we have predicted and continue to say there will be more of in the coming years ahead, especially if we don't reverse course immediately. For many metrics, we are way worse off than we were in the Depression. Yes, you read that right. I will write a separate article on this as well. It's a situation we partly brought upon ourselves, having elected our governments and allowed ineffective, unaccountable leadership. It's time for a reality check and fresh start. The goal and the design of politicians in the current governments is to obfuscate reality and break the will of the people and to make them so distracted and so overwhelmed they just bury their heads in the sand. And I've actually had many conversations with people that have said that very thing when I talk about that and mention, hey, I've read, over the years, this is a goal of theirs, and they say, well, works on me, Brandon, because it's just too confusing, it's just too annoying, and I just put my head in the sand. Literally verbatim. I've had many people tell me that over the years. One of the most enlightening discoveries I've made in recent years, though, is redefining money in a way that makes sense for everyone. I love Robert Breedlove. He's amazing, incredibly smart. However, he makes money sound very complicated, and for most people, we can't make it complicated. It's not a complicated thing. Money is a container for your time and energy, period. We have to think of it in those terms. We can't get confused on 5, 30, 60-minute diatribes because the average person checks out. Fiat has destroyed people's attention spans. I've been working on transforming this insight into a business venture here through my newsletter, YouTube, and other media platforms, etc. Bitcoin trading cards, and on. My goal is to empower people worldwide with financial knowledge and freedom, as Jeff Booth aptly describes it as the greatest game. Understanding that money is a tool and deeply psychological that help us bring order to the current chaos. I feel a calling to help all 8 billion people on this planet, not just a select few. The path that I was on the last 10 years only helped a few dozen people around me. Doing real estate, raising money, the tenants, etc., that only helped a few dozen people. I wanted a game that was much bigger. How do you do more with less? When we establish a fair and honest monetary system, everyone benefits, irrespective of their profession. If you can save more than you spend, you win. That is how it works on a sound money system, a neutral system that captures deflation. No matter where you work, a doctor or working at McDonald's, if you save more than you spend, you get ahead. You get ahead, no matter what. That's a beautiful system. That's a fair, just, and honest system. Fiat currencies are inherently political. As long as we have fiat currencies, politics will persist. Bitcoin offers a historic opportunity to introduce real money into human nature for the first time and dismantle cronyism and politics. And I have our last 3 portfolio allocation pie charts, if you want to call them that, I guess they are pie charts, but they're in here. So again, you can go to the link in the description, click the link for the blog, and you can see the pie charts there and how it's changed over the last few months and the breakdown of that allocation. So the first asset class is Bitcoin. Bitcoin, not crypto. Remember that. I continue to engage in dollar cost averaging into Bitcoin as a means of saving. The best savings tool we have, bar none, Bitcoin, is up 65% this year. Inflation will continue to rise long term as we just hit $33 trillion in debt this week. If you're holding dollars, you will have to continually find more and more of those dollars to pay for normal everyday things or assets or whatever it might be. You got to find more of them because they're worth less and less, so you have to find more of them. The only finite asset to trade for your finite time is Bitcoin. Again, I have yet to find another perfectly finite asset like your time. Remember, money is a container for your economic time and energy. It's a finite container in Bitcoin, so you can put it in there and it doesn't go away. Every other container has some form of inflation to it, and it leaks. Your time and energy leaks out the side in the form of inflation, the stealth tax, actual taxes, what have you. Bitcoin will continue going up in value forever because fiat will continue to lose value forever. And I think that's an important distinction to make. It's not that Bitcoin is getting more valuable, although it probably is. People are building, growing the network, people are coming to the network. But it's the fact that fiat is losing value is what is going to be the massive driver of Bitcoin adoption and the Bitcoin purchasing power going up. Right now, we currently have about 36% of our portfolio in Bitcoin. I do expect Bitcoin to become a majority of my portfolio in the next few years, especially this decade, as fiat decreases in value. As I said, probably upwards of 90 to 99% of our portfolio will become Bitcoin. If you want to see some wallets that we use, hot wallets and cold storage wallets, remember, take your Bitcoin and put it into cold storage. It only takes a couple seconds. It's very simple, very easy. Get it into your own custody so it's a bearer asset for you and you're not subjected to banks, to brokerage accounts, to safety deposit boxes like you are with every other asset. Real estate, next asset class, positive cash flowing rental real estate. While real estate remains stable, we're facing the departure of a long-term tenant, resulting in some lost rent through turnover and cleaning, and they're also trying to delay their payment for a couple of weeks on a little agreement as well. So yay, real estate, fun, fun, fun. Again, one of the reasons I realized over the last 10 years of doing real estate that I'm only helping a few people, and there's high price to pay of experience, learning, cash, just to get into the game and to learn the game and to be good at the game and have economies of scale and have situations that actually increase wealth over time. Such situations highlight the importance of financial preparedness for unexpected changes. Again, I look to the diversification in assets to weather the storm, and why this letter is focused on highlighting that on a monthly basis. We have about 20% in rental real estate currently. Commodities: gold, silver, oil wells, uranium, copper, wheat, corn. Commodity investments remain unchanged for us, but I'm contemplating selling some assets to diversify further. Silver in particular has performed well for me over the last decade and has done its job at savings and beating inflation for me. Again, another reason to hold real money. This is because we bought low and stayed patient. Because of life situations arising, I may put some assets together into a private placement for one of my friends who handles apartments, or possibly some dividend-paying stocks so my asset can pay for my liability. So we have about 16% in commodities currently. Paper, which are stocks, bonds, IRAs, 401ks, which we don't have 401ks, and we have a small, very small IRA of a couple $1,000s from an old year-long or 2-year-long job that was done 10 years ago. That's grown, actually, almost doubled just because of investments that were made and being active in that. But again, that's a small part. We may be adding to this bucket here soon for the dividends we just spoke about to pay for that liability, some taxes, and a car potentially of just paying, instead of just paying cash for the liability and losing that cash forever. Remember, your cash on your balance sheet, even though it really is a liability, most people have it in their asset column, that should never leave your asset column. It should always stay in the asset column. It shouldn't leave and be gone. So we want to put that cash to work for us. We want to buy a dividend-paying stock. We want to do something that pays us to own it over time, instead of just, I want to pay cash for it and then the cash is gone for a liability, especially for a car or taxes or something like that. So I might possibly buy a bunch of puts on a few stocks that I'm eyeing and kind of been looking at and researching over the last last month or two, so I can gain some cash flow off the premiums, and that way I can buy at a lower cost basis as well. We'll be vetting the strategy a little bit more and where we might go with it over the next 30 days, so stay tuned. We have about 3% in paper, but that is subject to change here. A special tip, again, watch the credit markets, the bonds. This is what really controls the world, especially the 10-year treasury. This is, again, where we just talked about earlier, but this is where the markets are going. The dog that waves the tail. The treasury market is what tells us, especially that 10-year, is what tells us where the stock market will go, where equities will go. So be cognizant of that. Cash and businesses, the last class here, kind of grouped them together, business and cash. We're dealing with a tax bill due to last year's sales and properties, which we don't like doing. We can't stand doing, and a new car coming up, like I mentioned, hence why I'm looking at some ways to convert income to throw off some more cash flow. It's frustrating that we're taxed twice on our hard-earned income. First as income, and then again when investing through capital gains. Really mind-blowing. You do a good job, provide value, and your tax government steals from you, and then you make good investments, you do your homework, and you have conviction, and you are bold or whatever it is, right? You take a gamble and you're taxed again. Just absolute clown world. Robinhood, for instance, pays 5% in cash sitting in your account. It might be an option for some people. This isn't financial advice, right? It's freedom advice always. Point being here that there are many ways you can be earning interest on your cash that is sitting around. Many ways. Private placements. It could be investing in someone else's deal and someone else's business. There's many credit unions and banks, cash sweep accounts, brokerage accounts like Robinhood. This is the most recent one I just saw, so it's something that, if you have cash doing nothing, and you say you know nothing at all, and you have cash doing nothing, you might want to look to move it to some different banks or some different brokerage accounts where you can actually earn some cash and stave off some of the inflation. That's not going to, 5% isn't going to come close to getting you into, but it might be 50% of the inflation you're seeing, or 30% at least, instead of 0. But, disclaimer, anytime you are earning yield, know that there is risk involved. The person holding your cash is lending your cash to someone else for an even bigger yield. Again, banks blowing up, brokerages accounts can be shut down or frozen. So remember that you're taking a risk, taking a gamble, you're investing when you are even have your cash sitting still. That is still a gamble. Weigh your risk tolerances, and figure out what makes the most. Sorry, I can't talk right now because my little 3-year-old, whose birthday today, a couple days ago, was under me, and then he jumped up and slammed me in the mouth, and my sides of my mouth are all bitten up, and so I keep biting them, and so bear with me here. Weigh your risk tolerances and figure out what makes the most sense for you, whether it is banks, credit unions, or brokerage accounts. This is again why I love Bitcoin, but we are still living in 2 separate systems, which makes it tough for sure. Cash on hand is also good in case our long-term view of inflation is wrong. If we experience massive deflation and the dollar increasing in strength, the DXY, which we've talked about many times over the last year or two, then we will be able to use the dry powder, the cash, to buy many more assets as well. We have about 25% in cash right now currently. And again, we have the real inflation charts in there. What government's telling us it is, with almost 3, 4, 5%, but real inflation is really at 12, 13, 14%. When you look at the 1980 inflation, how they used to actually calculate it, and they've stripped it all out now. Remember, over the past month or two, I've scaled back my attention to the macroeconomic landscape. After over a decade of studying the existing system, I've grown disillusioned with its moral shortcomings. Why give power and energy to a bankrupt system? It's clear that significant changes are on the horizon with Bitcoin and new financial paradigms set to totally reshape the world. I've always been ahead of the curve in my predictions, so it might not happen overnight. But I choose to channel my energy into educating people about the emerging world that promises fairness, prosperity, and freedom, importantly for all. When you align incentives, the world starts to heal. Fiat currencies are the disease. Central banks are the disease. Simply put, the dollar is backed by nothing, making it currency and making it easy to inflate away and steal all of your wealth, your time and energy. This allows people in positions of power to control the masses with endless fear campaigns and propaganda while keeping most poor, so they are helpless and subjected to this endless torture. Broken currencies permeate all areas of life currently. All government currencies, all fiat currencies are permeating the whole entire landscape of the world right now. Bitcoin is a neutral money that captures deflation and spreads a higher standard of living and lower cost back to all people inside that system that use it. Fiat currencies are designed to lower standards of living and raise costs for the 99% while sucking the gains up to the few at the top. And remember, fiat currencies have a 100% failure rate. 100% failure rate. All fiat currencies in human history. The stealth tax inflation that governments and bankers use to siphon away your wealth without having to tell you. This doesn't have to continue. You can easily change this with a 1-second choice of choosing a money that doesn't steal from us every second of every day. Stay strong. Thank you for coming to my TED Talk. I appreciate you sharing this out because the algorithm hates truth. Let me know what you think about the portfolio. Go check it again in the blog. We have the link to the blog there. Let us know your thoughts on the video here or in the blog. I would love to see your thoughts, maybe what your portfolio looks like, what you've had success with, what you haven't had success with. And this is not financial advice, it's freedom advice. I'm always a student here. Trust but verify, question everything with boldness, even the existence of God himself. And we look forward to seeing you on the next one.